Man, there's a whole lot happening in the country right now. And yes, there are some implications that spill over into the housing market. So here we are doing a different type of video today and sharing my 7 predictions of the housing market in 2024. Guys, make sure you stay until my last prediction. You're going to want to hear this as it's addressing one of the biggest announcements real estate has had since the industry began. We're getting right into the video today. And if you're new to the channel, my name is Mike Harrison, a licensed realtor in Texas. To kick us off, let's start with our first prediction or question. Will there be a market crash in the United States? Short answer, no. Not just no, but hell no. First, let's define a market crash. Forbes Advisor defined this as a rapid drop in unsustainably high home prices due to waning demand. In my opinion, there will absolutely not be a market crash, especially in the area that I'm in, the Dallas, Texas area, because the demand still remains high and a majority of our homeowners have stable jobs paying at or around 3% interest rate on their mortgages. The record low supply of houses on the market protects against a market crash, says Tom Hutchins, EVP of production at Angel Oak Mortgage Solutions. And also, when you think about it, one major part of the 2008 market crash was we had folks buying homes they truly could not afford and had no business getting approved for, even loans up to $500,000 or $1 million homes. The massive wave of home buyers that came in when rates were 2.5% or 3% are standing on much better financial footing and are already sitting on a significant amount of equity. For example, one of my recent listings was purchased by my clients in 2021 for $378,000, the height of the home buying craziness. We just sold in early 2024 at $540,000. That's $162,000 in appreciation in less than 3 years technically, or an average of $54,000 per year, or 43% in overall appreciation since they purchased during the market highs. Senior macroeconomist over at Zillow Home Loans suggested in 2024 we'll see home appreciation take a step back but not plummet. If you truly believe this prediction is true, you're agreeing that this outlook doesn't suggest that homes are going to plummet, but rather than appreciating at 10 to 15% a year, maybe they're appreciating at 3 to 5% a year. Definitely no suggestion of a market crash. Even Comerica chief economist Bill Adams stated, Comerica forecast that national house prices will rise 2.9% in 2024. And again, going back to our market crash definition earlier in the video, this would indicate a significant depreciation in home prices versus a minimal appreciation in 2024. And chief economist Jackson Harrison over at Harrison Homes also said,
yeah, guys, there's not going to be a crash. Come on.
Yeah, listen to the 7-year-old experts. What are you talking about? Another example, in 2023, despite more than double the interest rates, in Dallas County alone, there were still 3,766 homes that sold above $600,000 compared to the 4,438 in 2022. And 2,909 homes sold above $700,000 compared to the 3,285 that sold in 2022. In Cullen County, the county that houses the highly sought-after areas like Frisco, Texas, McKinney, Texas, and Prosper, had more than 5,000 homes sell at $600,000 or higher in 2022, and 3,739 homes sold more than $700,000 in 2022. In 2023, that same county had 5,000 homes sell above $600,000 and still 3,307 homes sell above $700,000. In other words, only about an 11% decrease in sales above $700,000 in both Dallas and Cullen counties, which are pretty affluent home prices in these areas, despite rates literally doubling from 3% to 7% plus year over year from 2022 to 2023. To me, the data suggests that there's no evidence of a market crash, but rather a healthy market slowdown. And if you've been watching this channel for a while, you know I rarely lean into politics, but I'll go ahead and share my stance on this part real fast. Listen, being a realtor in the North Texas area has only become easier with the U-Haul Employee of the Year governing California. More people have moved from California to Texas and Florida than any other year on record. And thankfully, many of you guys watching this channel from the West Coast have reached out to me and said, hey, I love California, but I'm not standing with how it's being governed and are relocating over to North Texas. So again, my personal stance on a market crash is slim to none, especially in North Texas because of the high demand, largely thanks to the bad policies that are in other highly populated states throughout the country, and we have an affordable cost of living in our metropolitan areas compared to other major metropolitan areas throughout the U.S. Let me know in the comments below what you think will happen in the housing market for the rest of 2024. Whether you agree or disagree, I want to know your opinion. Speaking of demand, let's go ahead and dive into our next topic, and that's going to be the overall supply and demand factor in the housing market. Axios reported in December 2023 that America is short 3.2 million homes, a big factor into why prices are still high. Liberal media sources like CNN and New York Post have actually suggested that we're short 6 to 7 million homes. But when was the last time anybody trusted what they had to say? America's population is increasing faster than our housing inventory, And we won't be able to overcome this by just building single-family homes. We need to be building plenty of multifamily units as well. Areas like New Orleans, Austin, and Nashville kept slight surpluses recently that put them closer to the equilibrium, according to Axios. But the rest of the country suffered from a severe shortage of inventory. And unfortunately, with the cost of materials increasing significantly, these first-time homebuyers have been weeded out of the new construction market. I can speak for my local market in the Dallas, Texas area. It's not uncommon to see a community where 50 to 100 homes are being built at a time. We have many builders like Highland Homes, Stone Hollow Homes, Trophy Signature Homes, Bloomfield, and many others offering $10,000 to $20,000 in buyer incentives, paying agents extra in commission, and borderline begging for business. So while the data suggests that there's a housing shortage, there's also an affordability shortage as well. Many of you guys watching this channel know that these rates have kept would-be home buyers on the sideline for about the last 18 months. Even with the overall data suggesting that we have a housing shortage, and again, my prediction is that we will continue to see that trend, it doesn't really matter if buyers are now starting to jump on the multi-generational living trend. I showed a house to some friends of mine last month that was nearly 5,000 square feet on 2 acres. There was a family with several kids plus grandparents living there. This isn't uncommon anymore. But yes, back to the original point, I predict that the housing shortages will continue into 2024. Unfortunately, 2008 surplus of homes has cautioned many home builders to be a little bit more cautious this time around. And speaking of rates just a minute ago, our next prediction is one that you might be waiting for. At the time of making this video, we're seeing a 6.9% interest rate on a 30-year fixed rate loan. And before I move on to the rest of this topic, yes, you might be watching this and be like, man, 6.9 is terrible. But Nigeria's central bank just hiked its interest rate to 24.75% as it battles sky-high inflation and a currency crisis. Oof. That ain't a crisis, that's a travesty. But yes, we already heard from the Fed that there will be 4 rate decreases in 2023. But the recent high inflation readings following 6 months of steady slowdowns in prices have caused a slight pause as the Fed continues to evaluate the latest inflation impact. The Fed's credit, they've been very consistent with this message for a while now. They want to see inflation rates hover around 2% before they decrease the interest rate any further. And recently, new quarterly projections issued by the Fed indicated that policymakers forecasted the stronger growth and inflation above their 2% target would persist into next year. We can anticipate another 3 rate decreases in the rest of 2024, but not seeing an actual significant decrease in the overall rate. One reason for the setback from 4 cuts to 3 is the Fed expects core inflation, which excludes volatile food and energy costs, to still be at 2.6 by the end of 2024, up from their previous projection of 2.4%. In January, core inflation was 2.8%, according to the Fed's preferred measure. And if you've watched my videos before, you know I've referenced how Fed Chair Jerome Powell is not liked by either side of the political aisle. Both Trump and Biden are not fans of him. And to be honest, that's where a Fed chair should be, a neutral party or neutral organization within the monetary system. However, I'd bet my bottom dollar that rates do get slightly politicized come election season. Overall, my prediction is we'll see rates at the lowest get between 5.8 and 6.25% before a rate buy down, with the biggest rate cuts coming right before or right after the election to show political strength. My next real estate prediction of 2024 is that home price growth will vary state by state. This goes without saying, but obviously supply and demand varies widely throughout the country right now. As a realtor and a homeowner myself, I've personally witnessed the crazy price growth we've seen in Texas. I bought my second home in Texas in 2018, and my home values have almost doubled since then. I'm seeing homes in my neighborhood sell for prices that make it very tempting to sell, but I'm holding. The Motley Fool reported that median home sales price in the U.S. was $417,700 as of the fourth quarter in 2023, which is 4% down from Q3 of 2023. Hawaii is the most expensive state to buy a home with a median home value of $832,688, according to the Zillow Home Value Index average over the fourth quarter of 2023. And then West Virginia is the least expensive state to buy a home with a median home value of just $154,152, according to the same report. The Federal Reserve Bank of St. Louis reported the median home sales price has increased 37% since first quarter of 2020. But overall, here's a look at how home sales prices have changed over the last 40 years. In 1980, the U.S. had a median sales price of $63,700, then $123,900 in 1990, $165,300 in 2000, and $329,000 in 2020, and most recently, like I mentioned, $417,700 in Q4 of 2023. And since 2020, again, going back to my local market, Texas and Florida have led the country in the population growth, and the housing prices are starting to reflect that demand. As of 2024, we're seeing Texas have a median home value of $294,566 and Florida at $387,988. However, despite these two states leading the country in population growth, it was actually Rhode Island and Vermont that led the way in pricing appreciation, with Rhode Island home prices appreciating 15% and Vermont increasing 13% in 2023. If you're watching this and you live in Vermont or Rhode Island, help me understand in the comments below, why are the home prices going up like that? I mean, what's going on up in Rhode Island or Vermont? Like most other business sectors, price growth on homes in the US will vary largely based on the supply and demand, with one major caveat for the housing market being that the average household income for each particular state definitely weighs in. And if you're watching this from Texas or Florida, comment down below what you've been seeing on the home prices in your neighborhood. My prediction, we'll see home prices continue to increase between 5 and 10% throughout most states in the US. Now on to one of the most debated topics in the real estate industry and sometimes even the stock market. Will there be a better time to purchase? Short answer, it depends. I'm a firm believer in the philosophy of time in the market versus timing the market. Like 99.9999% of people could not have predicted the black swan event that happened in 2020 that led to the historically low interest rates. And you heard me mention earlier that the average home value in 1990 was $123,900, and in Q4 2023, it was $417,700. That is $293,800 in appreciation just by living in your home over the last 33 years, or an average of around $8,900 per year. Just by staying put in the housing market, your net worth increased by nearly $300,000 over the span of 33 years. Now again, this varies state by state, but you get the idea. I represent buyers and sellers from all over the state, and thanks to you guys watching this channel, I've literally been meeting folks from all over the world. Literally, I've been speaking with folks from Australia and in Europe recently. And what I hear fairly often from folks within the States and even across the world is that many folks think that there's going to be a better time to purchase a home than right now in 2024. Let me address that and be candid real fast. You will not see rates go back down to 3%. And once rates inevitably get back to 4.5% or 5%, do you really think that you as a buyer are going to have more leverage in the transaction when more buyers are flooding the market for the limited inventory that we do have? Meanwhile, just to top that off, while you're waiting on the sideline, your home prices are just going to go up 10% each year. And guys, this is not my sales pitch for you must buy right now. Rather, this is my advice to those that have been waiting on the sideline for that magical 3% to come back. Listen, if you're in the financial position with good job security to handle a temporarily higher payment with current interest rate, make the move now while you have way more leverage against sellers before the prices continue to increase. Buy and refi. That's the sexy saying that many of us are using in the business right now, and there's some truth to it. And to be more specific with my area in the Dallas market, you'd have to be sleepwalking the last couple years to not have heard of the major projects coming to this area. These projects are only going to increase home values, whether it's the Margaritaville Resort near Lake Texoma in Denison, or the PGA headquarters of America in Universal Studios in Frisco, or the speculation that Dallas might be opening up casinos in the future if Texas legalizes gambling. The future looks very bright in the North Texas area, at least in my opinion. So again, Mike's prediction, or just really my opinion of this overall topic, it's way better to put time in the market versus trying to time the market. If you can afford a temporarily higher payment right now, your cost for delaying, especially in the North Texas area, will be higher than the cost of purchasing right now in the long run. And on to our sixth prediction, this is going to be a quick overview into the new construction outlook of the housing market. Texas A&M University reported in 2023 that Texas hammered all other U.S. markets in new permits issued. The Dallas-Fort Worth area, Houston, Austin, and San Antonio are the top home building markets in the United States and expected to continue that positive trend in 2024. Florida was second, North Carolina was third, California was fourth, and Georgia was fifth. The National Association of Realtors quoted Ali Wolf, another chief economist with research firm Zonda, that the new home market is becoming a dominant player, and we expect that to continue in 2024. New construction sales typically account for 10 to 12% of single-family home sales, but recent data suggests that it's more like 30%, especially since we've faced all this limited inventory with pre-existing homes. And this makes sense. Think about it. A large percentage of U.S. homeowners are sitting at or around a 3% interest rate. Many homeowners, including myself, are in no rush to get rid of that. That's where the demand for new construction homes comes in. Plus, you've heard me mention this before, but builders are offering lucrative buyer's incentives and also offering a reduced rate to high 4s and low 5s if you get with their preferred lender. So to sum it up, my prediction is that in 2024, new construction will play an even bigger role in the housing market, accounting for a higher percentage of homes than we've seen in years past. And my last prediction for real estate in 2024, and I've been clamoring to address this, it's my prediction on what will happen to realtors after this NAR settlement that you have all been hearing about. As many of you have probably heard, there's a settlement that once approved will change how a buyer's agent commission is advertised. It will just basically no longer be advertised on the MLS. My friends and family have been calling and texting and just asking around like, hey, what does this mean for you? I heard that buyer's agents aren't getting paid anymore. Unfortunately, the public has played right into the media's hands. The media and reporting on this has been incredibly misleading. This changes absolutely nothing for the agents that have been getting buyer's representation agreement on the front end of the sales process. Not to mention, commissions have always been negotiable between agents and their clients. At least here in Texas, sellers have paid anywhere between 5 and 6% commissions, with a listing brokerage taking half and the buyer's agent brokerage taking half. It's part of the seller's closing cost, much like the buyer has their own set of closing costs ranging between 2 and 6% of the purchase price. And listen, use an ounce of strategic thinking and common sense in this scenario. If you're a seller, do you really think your home is going to sell for top dollar and as fast as the market allows if your home is apples to apples in features and comps, but your neighbors are offering a 3% buyer's agent commission and you're not? The mainstream media and new media, folks on YouTube and with podcasts, have tried reporting that agents are no longer getting paid commissions. This just simply is not true. And another thing, if you're watching this video and you're one of my peers and you're a little sensitive or weak-minded, you might want to fast forward past this part. Our job as a real estate agent is to connect buyers and sellers. Many of us have allowed the technology to do the connecting for us. Having a buyer's agent see the listing in the MLS and the buyer's agent brings their buyer to see the property, rather than us as listing agents hunting to connect the two parties ourselves. This has allowed many of us to sell more homes in less time, and that's great, but we should have never neglected the part of building new relationships, meeting new people, and expanding our databases. Agents, I'm asking you, when was the last time you hosted an open house for your listing? What kind of photos are you uploading for your listings? Do you do video tours and blast on all social media platforms? Have you ever tried partnering with a lender or another business within the community to co-market your listings? And what am I getting at? Listen, anybody that's watched sports over time knows that the NBA and NFL has changed rules over time. My favorite basketball player of all time is Kobe Bryant, the Black Mamba. And I bet you, I promise, I 100% believe that if the rules changed dramatically throughout his 2 decades of playing, he would have still found a way to drop 30 a night and win 5 championships. Look at Tom Brady. The rules changed dramatically over the span of his 2-decade career, and he still managed to find a way to win 4 championships on the second half of his career versus the 3 in his first half of his career. This is simple. If you're a part-time agent and an agent that treats this like a hobby, you're gonna get weeded out, and those of us that are taking this seriously, servicing our clients with world-class experiences, and expanding our databases are only going to increase our market value. Long story short, my prediction is the real estate pretenders will be leaving the industry, and the real estate practitioners, the ones that are treating this like a business, will only increase their market share. Closings happen every single day, no matter what happens with the market. And we all know the saying, cream rises to the top. Champions are made in the off-season. So to my peers out there, build on your database in the off-season so you can hit the next selling season with even more intensity. Let me know in the comments below what you think will happen after this NAR settlement. So guys, this is going to close out on my 2024 real estate predictions. If you made it to the end of the video, thank you so much for watching. I truly appreciate it. Let me know in the comments below your thoughts on any of these predictions. Whether you agree or disagree, I want to hear your opinion. Go ahead and like the video and subscribe to the channel. And lastly, if you want to see what a great North Texas suburb is like, check out this video by clicking here.